Is the Los Angeles housing market in store for a correction? The numbers suggest we're already correcting, but does that mean what you think it means? I don't think so. Allow me to explain. I'm Jon Schwartz, a house hacker, investor, and realtor in Los Angeles, California, and you're watching House Hack Los Angeles, a channel about winning in the Los Angeles real estate market. This is my bi-weekly market update for June 22nd, 2021. Each Sunday, I review the week's MLS activity for Los Angeles County to bring you the latest in what's happening in our market. These numbers come straight from the MLS, and you won't find these graphs anywhere else because I make them. If this is your first time watching the weekly update, here's a quick explainer. Each graph covers the previous 12 weeks. The bars represent actual weekly numbers, and the line represents the 4-week trailing average. This smooths out the noise and helps us identify trends. Now, let's get into this week's data. Looking at single-family listing activity, I'd say we're far enough along in the spring-summer season to call it. It's a weird one. Typically, by this point in June, we see a much more active market, more listings and more sales. Instead, our new listings have hovered between 1,100 and 1,300 for the last 3 months, and sales have hovered mostly between 300 and 400. Overall, inventory has continued to open up marginally from 684 to 726 in net new listings per week on a 4-week trailing average. But we're definitely still in a COVID market. There was talk that as soon as life began to normalize, a raft of otherwise scared sellers would flood the market. Hasn't happened. And with prices where they are and all the demand over the past year, we're also not seeing the usual wave of spring and summer buyers. In effect, COVID has flattened the cyclicality of the market this year. Looking at our single-family sales indicators, I see a correction. At least as much of a correction as we'll be getting in Los Angeles. Look, I've gotten a lot of inquiries over the last 2 weeks as to whether or not a correction is coming. My answer is yes, a correction is coming, but it's not going to see prices drop. What we'll see is price appreciation slow down, and that's as much relief as buyers will be afforded. There's simply not enough distress or supply to create the kind of price drops that we saw in 2009 and 2010. So this is what our correction looks like. Average price per square foot has climbed in the last 3 months from $722 to $753, about 4.3%. By contrast, the 3-month climb from September to December 2020 was 18.5%. So pricing is still heading northward, but the outrageous pace we saw a half year ago is fortunately behind us. Median days on market has been 10 or 11 for the past 7 weeks. In other words, homes are selling as fast as humanly possible, and that's a 10-day median. I don't think we'll see this number drop any further, and eventually we'll see it climb, though when is anybody's guess. And sell price to list price ratio is exactly where it was 3 months ago. Buyers would like to see this number dropping, but at least it's done climbing. So this is our 2021 correction as it's happening. The market is cooling off, not to the degree that prices are dropping, but enough that prices aren't climbing at a breakneck speed. Condo listing activity tells a similar story of unusual flatness for this time of year. New listings and sales are basically flat when we'd otherwise expect them to be ballooning. Net new listings is up modestly from 3 months ago. In condo sales indicators, we see a market that's correcting in the opposite direction. Last week, I dropped a whole video about condos, and here's the link, but also here's the TLDR. Condo inventory actually went up during COVID relative to single-family homes as people left urban cores and moved to the suburbs. So pricing became very favorable. Now we're seeing the correction. Average price per square foot is climbing, though not outrageously. What's conspicuous is the significant decline in median days on market, from 26.3 to 13 over 3 months. In other words, the speed of the condo market has doubled in the last 3 months. And sale price to list price ratio is up 1% from 3 months ago, which also is not outrageous. So it's still a good time to buy a condo, but it's become a competitive market, as evidenced by the very tight median days on market. Time to act before that window closes. In residential multifamily listing activity, and remember we're talking about 2 to 4 unit buildings here, inventory has opened up modestly in the last 3 months. Keep in mind that the multifamily market isn't cyclical like single family and condos, so we shouldn't expect an increase in activity just because it's summer. Looking at residential multifamily sales indicators, we had a pretty unusual week. 2 triplexes, a duplex, and a fourplex sold for more than $4 million each. And those listings alone pulled the average price per unit north of $600,000 for the first time, I think, ever. We also saw 2 listings that sold after more than 300 days on the market, and they pulled up the median days on market to 42, which is unusual but not unprecedented. So a funky week, but nothing we can't diagnose by pointing to a few specific listings. Finally, our newest addition to the market update, LA County vacancies as reported on Apartments.com. As house hackers and investors, we want to see this number go down, and that's exactly what we're seeing. Vacancies as reported on June 20th were at 40,254, pulling the 4-week trailing average down to 41,273. This is really impressive as we're coming out of a global pandemic at the same time that a lot of new inventory is coming to market for the spring-summer lease-up season. As a multifamily investor, I'm very encouraged by these numbers. In next week's video, I'm sharing 7 strategies to get your next offer accepted, and the week after that, I'll be back with another market update. Subscribe and hit the notification bell so you don't miss any of it. See you next week.